Hey guys, how's it going? My name is Brendan and welcome back to the channel. If you guys are new here, it's great to have you, and today I'm going to be explaining why the stock market is overvalued. Now this is actually going to be a two-part series where in the next video I explain why the stock market is undervalued, and I'm doing this to make sure that we don't get too tunnel visioned on a single goal or idea, because there is always two sides to a coin no matter what we are looking at, but especially when we're talking about money and investing. So for the sake of argument today, I'm going to be talking about why the stock market is overvalued due to bankruptcies, earnings, and a whole lot more. So if that sounds interesting, guys, go ahead and stick around for the video and make sure to hit that like and subscribe button if you guys do enjoy this by the end. So let's go ahead and dive on into this. Now, the first article that I have pulled up of many is explaining that why the stock market is the most overbought market in history. Now, this is of course due to a lot of things, but we are still seeing a near 13.3% unemployment rate, which we will look at later in the video, but this is almost triple where we were at last year. Now, this is very important because if we have an unemployment rating and lower projected earnings than where we were at last year, it would make sense that we would be at a lower point on the markets, because the markets are a direct representation of the businesses in them. And I know people say that the stock market and the economy aren't two, or essentially that they're two different things, but while they are two separate things, one is a representation of the other. If you look at the S&P 500, for example, it is a list of the top 500 American businesses. So they are a direct relation of our economy and how we are doing. If they are projecting under sales, then along with our economy, then they should be going down as well. But if we go and we look over at something like the NASDAQ 100, we can see that, well, despite being at a higher, or I guess really, despite being at a higher place than we were at last year, we still have that higher unemployment rate. We still have lower earnings. And in fact, what they actually talk about over here in this article is that out of, the top 500 companies, or out of the top 100 companies, 86 of them were projected at a loss of earnings and a lower earnings than last year. But despite all of this, we continue moving upwards, which is a big reason why people were talking about why we are just so overbought to the upside. Now, that being said, I want to talk about this one next, which is why investors should expect confusing earnings seasons ahead with delays and withdrawn forecasts. Now, what this is essentially meaning is that in our economy right now, with a lot of these businesses, they are under projecting earnings, they are delaying their earnings, or their earnings are simply not what they were have been for the last 10, 15, maybe even 20, 30 years. Now, they are seeing extreme under projections due to the pandemic that is going on. I have to be careful not to say the word, or else we might get demonetized and in trouble on YouTube. But this, alongside with the unemployment rate right now, is a great projection and reasoning as to why our economy is overextended, and we are looking over here at what could very well be a dead cat bounce. We are significantly higher than we were last year, despite, just look at the chart. We're significantly higher than where we were last year, despite having lower earnings, a lot less lower earnings for most of these companies, with the exception of a few that might be like cleaning or subscription companies or something like that. But for the most part, we're earning less money, and we still have a large part of our economy, over a tenth of our economy, that is unemployed. The unemployment rate is tripled what it was, but here we go. Now, the next thing I want to talk about is kind of show the statistics on this. Now, while the unemployment rate has gone down, we still have gone from a 14.7 to a near 13.3%. Now, this is meaning that we still have tens of millions of Americans that are without jobs and have not returned to their jobs yet. Now, this can be a little bit troublesome because with the stimulus and with our unemployment program that we have going on right now, set to expire fairly soon in the coming months, it begs the question, what happens when this stimulus is no longer a thing and people are no longer receiving these hefty bonus unemployment checks that they have been receiving in the past? Now, it's very possible that the U.S. Just decides to create a new plan. They continue to pump money, but then we continue to devalue the dollar. Not that I'm sure that they probably don't care about that, because they want to make sure that the economy is stable more so than the dollar. And that's not a bad thing, but that's their job to do that. And one of the final things I want to talk about over here is bankruptcies. Now, this is so obscure to me that a company can file for a bankruptcy and shortly afterwards rip and rally up 68% after, again, being almost almost dead. They filed for the bankruptcy, they got a bailout from the Fed, and then they rallied 68%, which is ridiculous. I remember seeing this when it happened, and I could not believe my eyes. So if one is wondering if the markets are overvalued, I would certainly say from this perspective, the market is extremely overvalued. Again, you have an unemployment rate that is triple what it is last year, yet we still see a lot of our indices that are even, incredibly higher than where they were at. So for, it would only make sense that we would have a higher S&P 500 or a higher NASDAQ or a higher whatever it may be, fill in the blank, at a 3% unemployment rate, yet we have a higher market at a 13.3% unemployment rate. Just adding a couple extra digits in there. So I think what I'm trying to say here is that if you're wanting to look at this from a bearish view, obviously the information is there. But in tomorrow's video or in the next video, whenever that may come out, I'm going to be explaining why the stock market is actually undervalued, because we know that the Fed has been absolutely pumping the stock market, which is something that I'm going to make sure to talk about. So if you guys did enjoy the video, make sure to hit that like and subscribe button. If you guys have any questions, be sure to ask those in the comment section down below. I love interacting with you guys and talking about this further down in the comment section. So once again, guys, thank you guys so much for watching, and I will see you guys in the next video.